Well, Canoe is currently one of the top 20 mutual fund companies, asset managers in Canada. We've got already over $2 billion in the system. So one of the most impressive startups that I've ever seen. I mean, the company's really been running for 10 years. I've stepped in as chairman. I've allocated about a day a week of my time to marketing and PR and development. It's a team of ex-Fidelity, ex-Enervest players. We've got a dozen people with more than 20 years experience. We are not a one-man band. It's not the Wilson Fund. It's the Canoe Fund, and it's something I'm very proud to be associated with. And we're, as I say, we're managing wealth in Canada for the benefit of Canadians. But our investment thesis is based on Bob Haber, one of our key portfolio managers. He has a book called Go Canada. The investment thesis is that global growth will spur demand for commodities and resources that are common to North America. Resources including services. They're common to North America. But within the North American complex, Canada will be the prime benefactor.
So on top of, if I understand correctly, you have substantial investment in Canoe itself.
Right.
Like, are you involved in selecting some of the investment within the mutual funds itself? No.
No, we hire externally portfolio managers, and we have the ability to hire and engage the best of the best, and that's how we ended up. We have an exclusive with Bob Haber, who is one of the top rated, ranked, and renowned investment managers, portfolio managers in North America. He was managing at one time over $50 billion worth of Canadian equities. So to put another few $100 million to work every month is going to be pretty easy for him.
What kind of style of investing was he using? Was it value investing or growth, or?
He's got a fairly interesting metric. So he does bottom-up analysis of companies, and he does top-down analysis of industries. And where they meet is where his proprietary models look. And so he looks at stock performance relative to commodity performance, and he's got his own proprietary correlation models. And as he looks at the commodities in particular, he's a huge bull on commodities, but you have to also know when to buy. You know, you don't
Cyclical
just step in.
nature.
But there's short-term cycles and there's a long-term bull. So he's got to trade the short-term cycle, but invest for the long-term, so the bull market.
Right. With the focus in Canadian companies?
The focus is on Canadian companies. In fact, our funds are typically going to be more than 80% Canadian. We'll keep the flexibility to do U.S. because, for example, there might be an offshore drilling contractor that works the right price, the right investment thesis, but we don't have any in Canada. But we'd like one in the portfolio, so we'll turn to diamond drilling, just to pick a name. Or, but I mean, the large cap energy stocks, the large cap gold stocks, they're all domestic Canadian opportunities.
Right, the likes of Encana, Suncor, or those.
Absolutely, Goldcorp.